Progressive taxes tax the wealthy more than the poor. Regressive taxes tax the poor more than the wealthy. I'll show you the difference coming up next. Your family works hard for its income, and you know that at least some of that income is taken by your government in the form of taxes. Additionally, you probably live within multiple levels of government, with each taking their share of what you earn. But not all taxation methods are created equally. Most modern methods of taxation fall into two categories, either progressive or regressive, with a third type of tax known as proportional gaining more and more popularity around the world. A progressive tax places a larger burden on higher income families. The more you make, the more you pay. A regressive tax places a larger burden on lower income families. A proportional or flat tax attempts to treat everyone the same. An example of a progressive tax is the United States federal income tax system. Your tax bracket increases the more you make. To understand how it works, look at these two hypothetical couples. The Browns make a combined income of $40,000. After standard deductions, they're in the 10% bracket. They pay $1,600 in income tax, or 4% of their gross pay. The Smiths make a combined income of $400,000. After standard deduction, they're in the 32% tax bracket. They pay $83,699 in income tax, or 21% of their gross pay. Much more as a percentage of income compared to the Browns. In fact, if you add up all of the income taxes collected in 2017, $1.6 trillion in total, the top 10% of all income earners paid 70% of the tax collected. The bottom 50% of all income earners paid just 3% of the total income tax collected. Sales taxes are an example of regressive taxes. If you're in a state with a 5% sales tax, if you purchased a $100 product, you'll need to pay an additional $5 in tax. To understand why regressive taxes affect lower income families more, go back to the Browns and the Smiths. If the Browns make $40,000 a year, they need to spend almost all of their income on basic living expenses, things like food, transportation, and housing. Let's say they spend 90% of their income, or $36,000. 5% of $36,000 is $1,800, or 4.5% of their gross pay. The Smiths make $400,000. While their cost of living may very well be more, they can make a choice to live simply and also spend just $36,000 a year in living expenses. At a 5% sales tax rate, they spend the same $1,800, but that is less than 1/2% of their total pay. Regressive taxes include sales and excise taxes, sin taxes such as those on tobacco, soda products, or gambling, registration taxes on things like automobiles, taxes on utilities, and one of the biggest regressive taxes of all, the Social Security tax, which caps out at $128,400 in income. There is a third type of tax that is less common, but it is becoming more popular outside the United States. A proportional or flat tax taxes all income at the same rate regardless of income level, spending habit, or asset level. Assuming a 15% flat tax rate, the Browns would pay $6,000 and the Smiths would pay $60,000, both exactly 15% of their income. The flat tax concept is often referred to as a fair tax, since the effective rate paid is always the same. There are advantages and disadvantages to each type of tax. Progressive taxes, for example, enable politicians to incentivize activities that they want to encourage. So if politicians want to encourage activities such as home ownership or saving for retirement, they can do so simply by creating tax deductions. While progressive taxes are a great way to tax the rich, generating revenue to help the poor, entire industries have grown up in the United States to assist sophisticated taxpayers in abusing deductions, reducing their tax liability below what they should be. Regressive taxes are a great way to bring about social change. If you want to reduce tobacco usage, just tax it. But it hurts the poor more than the rich, simply because the rich can afford to pay the tax. Flat taxes are fair, and with large standard deductions could even exempt the very poor from taxation. But removal of deductions could destroy incentives to give to charity, contribute to retirement, or to convince those who can to invest in innovation for the future. Please subscribe to my channel below. I'll be posting new videos weekly covering financial planning and tax concepts. You can also visit my blog at smartzonefinance.com for articles on taxes, investing, insurance, and other general financial planning topics.